Hello, everybody. Welcome to this Protection Insight podcast. Joining me today is Adam Shipton, who is Head of National Partnerships at British Friendly. And what we're going to do today is take a look at the British Friendly proposition and actually just start by taking a look at the market, Adam. So welcome to the podcast, Adam. What have you seen this year in terms of the income protection market? We've had a strange year in many respects, but what have you seen from an IP specialist provider's point of view?
Thanks, Vincent, and thanks for having me on today. It's always good to be able to chat to everybody. So, what we've seen in the first half of the year is, broadly speaking, the protection market was actually down on what we saw last year, but income protection slightly bucked the trend, and actually you could say it's broadly flat or actually come up a little bit. And that's quite interesting when you think the whole protection market was down, but IP was slightly different, and you think why is that? And my personal view is, we've been through quite a lot of, hefty events over recent years. We had COVID, obviously, and then furlough, for example, was nobody knew what furlough was. Then literally overnight, it was a household thing. And I think through furlough, people have seen how an IP type scheme actually works. They've seen it, the actual benefits, and a lot of people have actually experienced it as well. They've actually experienced having that sort of level of protection in there. So I think that's sharpened the mind around people thinking, actually, what would happen if my income was to stop, and how do I make myself sort of more financially resilient moving forward? And then obviously recently what we've seen is, inflationary pressures, they're going up, mortgage costs are going up, everything like that. So obviously the cost of living is increasing, and again I think that's to sharpen people's thinking into, actually it's going to be tight for me while I'm working. What on earth would happen if I was to stop working? I didn't have any income. How am I going to cope? So again, I think that's made people think more about their financial resilience, and obviously income protection is a really good way of making yourself more financially resilient through those harder times.
Yeah, I've been talking about a potential idea called a protection stress test. We have stress tests on mortgages, which basically illustrate if mortgage rates go up. But then, of course, there's the flip side of that coin, which is what about if your income disappears or drops down dramatically? So perhaps we should have something like that in the protection space. Obviously, British Friendly are specialist IP providers. That's all you do. So can you just talk? I know you've had some changes relatively recently. So you just talk about what the British Friendly proposition actually looks like at the moment.
Yeah, sure. So typically speaking, our demographic is very much the harder to insure clients. So the people in sort of occupation classes 3 and 4, more sort of manual workers. We deal a lot with the self-employed demographic who have little or next to no protection when it comes to replacing their income. And we've got loads of options. So we've got long-term options, we've got short-term options. In an ideal world, everyone would have a long-term IP plan, but we know through budget constraints, especially at the moment, that's just not possible. And we have seen over certainly the last few years, there's been a big shift in the market where there's been a lot more demand for cheaper type of IP plans, and that's where we've seen the growth of short-term policies, so much so that it's about 50-50 now in the market. So, alongside our long-term, we have got a suite of short-term plans, and you can cover yourself for 1, 2 or 5 years per claim on those as well. So if you are looking at a short-term plan, that can still offer some really good quality levels of cover to help your clients become more financially resilient, but obviously the premiums is going to be less than what it would be on a long term. And if you look at our average claim length, for example, for us it's actually 6 months. So if you take our cheapest plan of a 1-year policy, you're still covering the vast majority of our claimants for the entirety of their claim, even on that 1-year policy. So there is loads of different options that there's available out there at the moment.
Yeah, it's really good to see that kind of innovation from all the providers, really, to actually allow for these more, if you like, budget type solutions, because we need more people covered with IP. Historically, the longer term plans have tended to be more expensive because there's more risk carried by the life providers. So I suppose if you're going to make a claim, you're certainly going to be claiming for the first bit of it, whether that's a year, before you actually can claim on the next bit of it. So I suppose it comes down to your philosophy. Do you believe something is better than nothing, really? When we talk about premium options, Adam, you've had a bit of a change in this space, and I think this is good news for advisors. Just talk about the options that British Friendly have as far as premiums are concerned.
Yeah, so historically, all we've ever offered is age costed premiums. So we have been guaranteed age costed, but earlier on in the year we actually launched level premiums as well. So now with us you can have level premium or age costed, which really does offer the advisor and clients a lot more choice. And again, you know, it really depends on what that client wants. If they want a premium that just stays the same, you know, we've got that there. But if for whatever reason, because what you typically see if you compare a level premium against an age costed one. An age costed one will typically start off lower but increase as the client gets older. And we know if you look at the demographic that we work in, unfortunately it's almost like a bit of a double whammy for them where, you know, that they're in higher risk jobs. So the premium is going to be higher for them, but they tend to be in lower paid roles as well. So it creates a bit of a, you know, an affordability gap for them. So if, you know, they do want a level premium and it's just not affordable, don't discount the age costed option there as well, because that can again offer some really good levels of cover, rather than just thinking actually they can't afford a level premium and they, you know, they ultimately they leave with nothing. So again, that's a really good option for them.
Yeah, it's really good to see that added. I mean, I think guaranteed premiums are incredibly popular. From my point of view, I think it's always a question of, well, what's the difference in price? Because, of course, you've got one on one hand where the premium won't change. You've got another one where it will be cheaper, but it's going to go up. I mean, maybe a good idea for advisors is if you're going to pick British Friendly, just take a look at what the other option is, because you now have the ability to do that within the quote portal. So it's good to know that you've actually added that anyway. When we're talking about existing clients, Adam, what options are available for existing clients?
Yeah, so we've been quite proactive in trying to engage with our existing clients, and we've been talking to them, you know, since the beginning of the year around sort of financial resilience. So we've done marketing campaigns where we've written out to all of our members, just reiterating the importance of the policy that they've got and what income protection can do for them and their family. We do have options as well, such as premium holiday options. So if somebody is struggling to pay their premium for whatever reason, they can effectively put the plan on pause for a set period. We do offer flexibility. So say if somebody falls into arrears, we can arrange a sort of a repayment plan with them to get them, you know, to get them back on track. And we've also developed some really good advisor and client facing material, and we put that on our website within the Advisor Toolkit. And again, that's just really talking about the importance of income protection and why it's so good to be, you know, financially resilient, especially as we move into the period that we're moving into now. So we have been really proactive in that space, and there is a lot of support for advisors on the website that they can gain access to.
Yeah, and we'll actually add a link to that marketing support material on the British Friendly website. We'll put that just below the podcast. And I just wanted to ask you a question with regard to changes of occupation. We've seen a few of these queries at the network. What's the situation with British Friendly with regard to that? If somebody's doing one occupation, takes out the policy, that at some point in the future changes to a different occupation, do they have to redo their IP plan?
No, so with us on our level premium options where it is occupation rated, we offer terms that the occupation that they're doing at the time that they take the policy out. So we actually offer an occupation promise. So if sometime in the future they were to change occupation, it wouldn't affect the plan, and there's no need to take out a new one. If people are taking out age costed plans, it's not linked to what occupation they do. So again, that's it's not relevant for the age costed. But for the level where it is occupation rated, we offer that occupation promise. So no, you won't have to reapply if somebody was to switch occupations.
Amazing. That's really good. So basically the message there, I guess, is that you take a British Friendly plan and you can keep it through your working lifetime. You can change occupations and you're still going to be covered.
Absolutely.
And just as we wrap this up, Adam, the topic that we've been talking about a lot at the network and on the recent roadshows in November 2022 have all been about how to bring protection into the mortgage fact find, into the mortgage process, not to leave it too long. What's your take on that, and what are your top tips?
But my top tip would be, yes, the mortgage process that their clients are going through might have highlighted an income protection need, but it doesn't have to wait for you to put the income protection plan in place for the mortgage to complete, because that risk that you've identified is immediately. That risk doesn't all of a sudden kick in once the mortgage is there. They've got a risk to their income sort of straight away, so you can put that in place straight away, make them financially resilient immediately, and that will help them, because if that potentially wasn't there before the mortgage is completed and their income was to stop, that's really putting them on a back foot before the mortgage has even started. So yeah, try and put it in, as quickly as you can, and don't necessarily wait for the mortgage to complete before the IP starts.
I would say as well, when you look at a mortgage illustration, mortgage offer, it says your home is at risk if you can't keep up payments on your mortgage. So IP is a really good fit for mortgages. Obviously life cover, critical illness cover too, but IP really is a good fit because it does directly talk to the risk that the regulator's talking about, the risk of not being able to pay the mortgage. Okay, that's great, Adam. Just a whistle-stop tour through the changes there and a bit of a reminder of what British Friendly do in terms of the IP space. Thank you, Adam, for joining us today on this Protection Insight podcast. And obviously, I always say thank you to advisors for tuning in and listening. So until next time, it's bye for now.
Thank you very much.